Welcome everyone. Previously we have discussed in detail the components of IFRS. Let us go through in depth what are the process or the activities that comes under the IFRS. What are the steps that are followed in IFRS? We know that the main activity of IFRS is to study and implement or publish or finalize standards, which has to be followed uniformly worldwide. So we all know that the main activity of IFRS is to issue standards. So how these standards are issued or implemented? So let us go through those steps. Process of setting the International Financial Reporting Standards. The Financial Accounting Standards Board, otherwise known as FASB. It is a new one, a new term which we haven't discussed until now. FASB means Financial Accounting Standards Board. So the Financial Accounting Standards Board accomplishes its mission of setting IFRS through a comprehensive and independent process that encourages broad participation of all stakeholders. Previously we have mentioned that these FASB or IASB, before they finalizing and implementing a standard, they will study in depth each of these standards. Not only by these boards alone, they will share these proposed draft of the standard to various study groups, various professionals, various international accounting bodies, and after getting the comments and feedback from all these study groups, the International Accounting Standards Board will finalize the standard. So FASB, that is Financial Accounting Standard Board, accomplishes its mission of setting IFRS through a comprehensive and independent process that encourages board participation. Board participation means, earlier I have discussed, standard is provided to study groups, international accounting agencies, like that. So that is known as board participation of all the stakeholders. Stakeholders means whoever who is interested in that particular area. International Accounting Standards Board or international accounting agencies, various professional chartered accountants, all these are stakeholders in this field. So we collectively call a term stakeholder for representing all these parties. And the rules of procedure describe the operating procedure of FASB. An important principle guiding the FASB, otherwise known as Financial Accounting Standard Board, work is to issue standards when the expected benefit of a change justify the perceived cost of that change. So FASB has developed a plain language of cost benefit analysis summary that explains how the consideration of benefit and cost is integrated throughout the standard setting process of FASB. The simple concept regarding the activity of FASB is that before implementing or introducing a standard, the FASB will study the cost benefit analysis with regard to that implementation of standard. It will analyze what are the benefits of implementing that standard, what are the costs incurred for implementing that standard. If the benefit is greater than cost with regard to that particular standard, definitely the standard will be implemented. Otherwise, it will be revised or it may be cancelled, like that. So anyway, any activity with regard to implementation of standard by FASB is done after thoroughly analyzing the cost benefit analysis of that particular activity. So the high level overview of the standard setting process is established, and the process involves: first one, the board identifies the financial reporting issues based on request or recommendation from stakeholders or through other means. The need for a standard arises whenever there is an issue or a problem exists. So whenever there is a requirement for a standard, the requirement for a standard arises whenever there is some issue with regard to any of the financial aspects. There may not be any standard for that particular financial area, and there may be issues with regard to that particular area. So the stakeholders, Stakeholders means whoever that is working in that field. It will be accountants, international accountants, or accounting agencies, accounting bodies, international bodies, professional accountants. All these persons collectively known as stakeholders. So when the stakeholders will intimate the board regarding certain issue with any particular area in the financial recording. So there are such and such issues with regard to that particular area. So there is a need for a standard in that particular area, and board identifies such issues. So first step is board identify the financial reporting issues based on the request made by stakeholders or through any other means. The FASB decides whether to add a project to the technical agenda based on a staff prepared analysis of the issue. Earlier I have mentioned that FASB will done or implement all these activities on the basis of cost benefit analysis summary. So with regard to that, it will plan to add whether a project to the technical agenda based on staff prepared analysis of the issues. It will study in detail what kind of analysis has to be done for identifying the issue. The board deliberates at one or more public meetings the various reporting issues identified and analyzed by staff. These boards, that means Financial Accounting Standard Board or International Accounting Standard Board, they used to conduct international meetings with the stakeholders in this field, means in the field of accounting and recording of transaction or financial preparation of financial statement. In that field, actually their field is accounting and preparation of such matters. So they used to conduct a meeting, and in each of these meetings they will carefully publish the reports or issues faced by the stakeholders. In the first point we have mentioned that the board will identify various requests made by stakeholders, and once they identify there are some issues with regard to any particular area, whenever they conduct a meeting, they will carefully mention, that is the meaning of deliberate, they carefully mention about the issues that pertaining in that particular area. In such and such kind of issues have been identified by various stakeholders or staffs, so it will be mentioned in the public meetings. Once it is done that, the FASB issue an exposure draft to solicit the broad stakeholder input. I believe you know what is the meaning of this sentence, because during the discussion of in Accounting Standards Board we have discussed about the process of setting standards by ASB. In that process setting standard, we have discussed about various steps followed by ASP, and one such step was preparation of an exposure draft. And in numerous cases I have mentioned what is the meaning of exposure draft. It is actually a standard that is prior to international publication. So exposure draft actually means a model of the standard which are going to be published like that. So before issuing a standard in public, or whenever the board is going to issue and publish a new standard, the board will first of all prepare a draft with regard to that particular standard, that is known as exposure draft, and it will be provided to various stakeholders. Stakeholders means I have mentioned that what is meant by stakeholders, in order to collect the comments and views from those parties. And the board holds a public roundtable meeting on the exposure draft if necessary. Usually this step may not be there in almost all the standard setting cases. Usually the exposure draft will be provided to the various stakeholders, and stakeholders will study in detail what are the contents of the exposure draft, and it will be intimated. Sometimes in some situations the board may conduct a personal roundtable meeting. After that, the staff analysis, the comment letters, the public roundtable discussion, all other information obtained through process activity. The concept is, we have mentioned that an exposure draft may be provided to stakeholders, and it may be provided through in the form of comment letters, it may be in the form of table. If there is a personal table discussion, it will be a public table discussion, and sometimes it may be published in the journals, in various accounting journals or accounting books. All this is done to collect the feedback from the various stakeholders, because prior to the implementation of a standard in the public, it will be provided to these stakeholders through different means. in order to collect their opinion. Means do the board has to make any corrections in the standard, or if the standard is correct, or the standard doesn't need any more corrections, or the standard is prepared well perfectly, like that. So the board has to collect the opinions of these different stakeholders. For that purpose only all these steps is carried out, and the board will collect various like comment letters, public roundtable discussions, and information obtained to different other activities. After that, the board redeliberates the proposed provision carefully considering the input received from the stakeholders. Now the board will go through the comments and feedback collected from the various interested stakeholders. And finally, the board issues an accounting standard update describing the amendments to the accounting standard codification. And then only the board will officially issue and publish an accounting standard. And if it requires any amendments, it will be mentioned in the statement. So these are the steps that are followed by a board before publishing a standard to the public. So these are the steps with regard to that. So let us go to the next area. Conceptual framework for financial reporting. So what is meant by conceptual framework for financial reporting? Conceptual framework set out the concepts that underline the preparation and presentation of financial statement so as to help the external users of accounting. So the main purposes of conceptual framework are: first one, to assist the International Accounting Standards Board in the development of future IFRS and its review of existing IFRS. That is the first purpose of conceptual framework for financial reporting. Assisting the IASB in the development of IFRS and reviewing the existing IFRS. That is the first purpose of conceptual framework for financial reporting. Next one, the conceptual framework for financial reporting. Why it is implemented? It is implemented to assist the board in promoting harmonization of regulations, accounting standards, and procedures relating to the presentation of financial statements by providing a basis for reducing the number of alternative accounting treatments permitted by IFRS. The main purpose of this conceptual framework is to bring harmonization of regulation. In simple terms, we can say unifying all the activity. And making the accounting activities and procedure more simple, rather than following different accounting standards or steps for any particular accounting practice. It is better to follow a single unified accepted method. For example, for solving or finding out the depreciation of fixed asset, there are different methods, and by implementing this IFRS concept, we can use and follow a unified standard or unified method to deal with depreciation. Because following different computation for each purposes will be very difficult for unified comparison, because solving or finding out the depreciation of asset in one method in one country or following another method in other country, and if it doesn't have any relation to each other, then it will be very difficult to compare. And IFRS ensures that Following a uniform system of standard will ensure transparency and comparison, and the conceptual framework for financial reporting assists the board in promoting harmonization and regulation and maintaining uniformity with regard to accounting practices. Next one, the conceptual framework for financial reporting assists national standard setting bodies in developing national standards. They not only assist IFRS or IASB, it also assists various national standard setting bodies. National standard setting body means in India it is known as Accounting Standards of India, or in European Unions, if you go through it, you will see another set of standards. So those are known as national standards or national standard setting bodies. For each country there will be a setting board, national standard setting, accounting standard setting body, and conceptual framework for financial reporting assists national standard setting bodies in developing national standards. It also assists preparers of financial statement in applying IFRS and in dealing with topics which are yet to form the subject of an IFRS. There may be accountants or certain specialized persons in preparing financial statements, and the conceptual framework for financial reporting also assists those persons in applying IFRS, because main purpose of IFRS means unifying the accounting practices all over the world. So IFRS assists various specialized personnel in adapting the international financial reporting standards. Next one, it also assists auditors in forming an opinion on whether the financial statement comply with IFRS. We all know what is meant by auditor. I believe you all know what is meant by auditor. And this conceptual framework for financial reporting also assists auditors in finding out whether the financial statement which are to be audited is following as per the IFRS, and if he has any doubts with regard to whether the statements is prepared as per the IFRS, he can get assistance from these IFRS bodies. And International Financial Reporting Standards Board will also provide all sorts of assistance to the auditors with regard to IFRS. Next one, to assist users of financial statement in interpreting the financial information contained in the statements prepared in compliance with the IFRS. Earlier I have mentioned that one of the main purpose of financial statement is not only preparation but also the interpretation of financial statements. You need to interpret whether the statement is depicting the actual information of the company or not. And the conceptual framework for financial reporting also assists the users, not only external users but also the internal users, in analyzing the financial statement of a company, either their own company or the other companies, and they will assist these users in interpreting the financial statement if it is prepared as per the IFRS compliance. Because users may not have an idea about the IFRS standards, so these IFRS standards or the conceptual framework will assist these users in interpreting the financial statements if those financial statements are prepared as per the IFRS standards. And finally, the conceptual framework for financial reporting provide those who are interested in the work of the International Accounting Standards Board with information about its approach to formulation of IFRS. There may be many stakeholders who are interested to know the activities of the IASB. In such situations, these conceptual framework provide necessary information to those stakeholders about the information relating to the activities or work of IASB. So in simple sense we can say the conceptual framework is not an IFRS, and hence it does not define the standards for any particular measurement or disclosure issue and overrides any specific IFRS. IFRS is working separately, and conceptual framework for financial reporting is also a separate area, but it working along with the IFRS as activities. So So that is the main purpose. So don't get confused. Conceptual framework of financial reporting is also working as per the activities of the IFRS. It is actually supporting the activities of IFRS. So and the standards and other main activities are done by IFRS, and all sort of assistance regarding the activities to support in fulfilling the objectives of IFRS is done by the conceptual framework of financial reporting. So it is, in simple sense, it is actually assisting the IFRS. And finally, the framework discusses objectives of financial statements, qualitative characteristics that determine the usefulness of information in financial statements. Not only in financial statement, it also provides information with regard to definition, recognition and measurement of elements of financial statements. Here the elements of financial statements means what are the main items of financial statement. We all know the main items of financial statements are income, expenses, assets, liabilities. And in the next session we will study in detail the elements in financial statement and how they are identified and how they are presented in the financial statement. So these are the concepts with regard to the process of setting IFRS standards and conceptual framework for financial reporting. We will discuss about the further theoretical aspects with regard to international financial reporting as well as the convergence to international financial reporting standards in the coming sessions. Until then, go through it.